What's happening, guys? My name's Austin, and welcome to the much anticipated DevvE Roundtable. Joining me today, Mr. Ray Quintana, CEO of DevvE, Tom Anderson, founder of the DevvExchange, as well as the CEO of DevvE, and Mr. Will Stewart. Now, you guys know Will Stewart's name. I shot a video about Will. We've talked about Will, but this is the first time that we're getting to meet him publicly. And Will, let me just be the first to say, on behalf of all of us and our community, we're really glad to have you here. And I know everyone's looking forward to meeting you. So thanks for joining us today.
Thanks for having me. Pleasure to meet all of you.
I'm excited on the community's behalf because I know people have been itching to meet Will. So yeah, this is great.
This is Tom's excited face. That's the one he makes when he's really stoked. All right, well let's get into some introductions. So why don't we start with you, Will, since we'll kick through Ray and Tom after. But so you have a long history, and I don't want to speak on your behalf, but let me kick it over to you. If you could just give us some introductions into yourself, your history. And what kind of jumped out at you about the DevvDigital opportunity?
Sure. It's a pleasure, Austin. It's a pleasure to meet everybody as well. A little bit about my background. It's kind of unique in that I started my career in Japan, which is quite different than most folks. I was recruited by the Japanese back in the early 80s to go over to Tokyo and be involved in the technology marketplace over there. I was recruited by a company called NEC Corporation back in 1983. In the corporate planning group in Tokyo. They had never had an American or a foreigner in their headquarters in Japan. So it was rather unique. They had 100,000 employees and one American in Japan. So I got very grounded in technology early on. NEC was a leader in the computer and communications markets all over Asia and made everything from semiconductors to satellites. And though I'm not an engineer by background, I got very grounded in technology early on. As well, it was a great formula for me because it coupled with my strengths in finance. So corporate planning was a great spot for me. I came back from Japan in late 1989 and decided I learned a lot about technology in the Japanese and the Asia marketplace, came into the Silicon Valley and started my first venture capital fund in the early 90s. Subsequently, over the next 30 plus years, had 5 early stage technology venture capital funds, along with venture debt funds. So I looked both at equity and debt markets my entire career. Invested a little over 300 companies during that period of time and raised billions of dollars for those companies worldwide. A lot of the companies many people would know here on the Roundtable. I met Tom and Ray actually back in 2018. I was an early investor, actually one of the first investors in a company called Expansive, and the executive chairman responsible for driving the capital market at Expansive. Expansive today is one of the leading environmental commodity exchanges in the world, where you're trading carbon credits, methane certificates, and so forth. And part of the platform that we were really focused on was developing, the right strategy around blockchain at the time. And we were literally searching the world to find the best blockchain. And a couple of times, as in our search, Tom's name came up, and they were like, "Have you met this guy down in Albuquerque?" And I looked at the founder of Expansive, and I said, "Hey, we got to go to Albuquerque. We got to meet this guy, Tom." So literally, it was 2018. We went down and met with Tom and Ray, and quite frankly, having visited probably a dozen different blockchain companies around the world, we were very impressed with both Ray and Tom. Clearly, they had not only the experience in the early crypto markets, but you could tell from Tom's philosophy that he was building the right guardrails to build the platform for the long term. He wasn't just caught in the early crypto markets and the volatility and how to adjust to those markets, but more so how to build value. And that was really critical in our decision making at the time. So I came on as an advisor in 2019. So I've been really hanging out with Tom and Ray for quite a while now. And as they started to formulate more of the plans around DevvExchange and DevvDigital and some of the other components of the platform, I was all in because the world is moving in this direction. I think timing is perfect for the company. And I decided to wrap my arms around Tom and Ray and really dive in. So quick summary, that's my background.
Wonderful. Wonderful. I actually spent 5 years of my childhood in Tokyo. I landed there about 3 years after you in 92, but
that's great.
Yeah. So, all right, let's kick it over to Ray. And I do want to mention Ray. Ray does have a bit of a hard stop in a little bit. So if you see him drop off, it's not that he doesn't like us. He has to go. So Ray, let's kick it over to you, buddy.
Yeah. So basically, most of the community probably knows me. Just to kind of brush over my background, started out in physics, forgotten more physics than I remember. Went into corporate development for a number of large companies, Tenneco, Texas Instruments, Robert Bosch Corporation, and then into all of those places. I was looking for opportunities that moved the needle for companies that had tens of billions in assets. So I developed kind of a top-down view of the marketplace, things that had global implications and again were meaningful at that scale. Took that to venture capital. The venture space was one of two general partners of the top early stage fund, according to Preqin, for the previous decade. And was very happy doing what I was doing until I got a call from a good friend of mine, Tom Anderson, at 2:00 in the morning when I was in Amsterdam. And from that conversation, kind of left my nice cushy job and rolled up my sleeves to come work with Tom. Because in my 20 plus years of being at the cutting edge of innovation, I'd never seen anything with the potential that, Tom had created and continued to innovate and everything that would become DevvEO and what it enabled, including next generation infrastructure for a digital asset exchange that changes the paradigm of trading and what's capable in the global financial markets. Not just if you're thinking in the crypto domain, it's across everything from securities to real world assets, and extremely exciting. So that's where we are now. And again, I think everything really really comes together. A big part of this whole kind of direction did come from Will's influence. So Will, working with Expansive, has discussions with the biggest asset aggregators and managers in the world, and really took note of how the world is becoming digital. All the storage of value, all the assets in the world, physical or in even some that are not necessarily as tangible as you would think, are all being tokenized. And what we realized, or what is enabled with our technology that we're talking about here, is really the marketplace for all of those digital assets. And so that's where we are, kind of in the eye of the storm, and it's a exciting, fantastic place to be. And I wouldn't want to be there with anybody else than the team we have here. So it's a great reason to not make that left and head to the golf course every morning. But
one thing I'll mention as Ray and Will are giving their backgrounds, there's only two. I've interacted with a lot of venture capitalists over my career. And there's only two VCs that I've actually enjoyed my interactions with and liked, as people. And they're the two people on the call. Just grounded people, really understand things. Don't just check boxes. I think that's the main thing. Ray and Will both are unique across VCs that I've met with, that they don't just check boxes and kind of do what everybody else does. They really can look at the big picture, really fundamentally understand what's going on, and just have found great synergies. So that's part of what's kind of led to this group here. And similar to what Ray said as well, Will has kind of opened my eyes early on to some of the things that have driven direction. I didn't realize tokenization was as big of a concept and growing as quickly as it was. Like you know that it's going to be huge eventually, but I don't think I realized how big and how quick it was growing until Will started saying, "Hey, I just had a meeting with these guys, and they're saying it's their number one focus, and the guys he's talking about are like one of the world's big financial institutions, for example, or that kind of thing." So Will's done a really great job of kind of saying some big strategy. And And then Ray, has been my business partner going everything, and so we see eye to eye on everything. We come to the same place, not just on strategy, not just on tactics, but also people and what's important in life, what we want to accomplish. A lot of the big goals that we're wanting to build, we want to build something that's world changing, that really it positively impacts people, impacts the world, lets people control their own value, removes middlemen and stuff like that. So those are some of the other, kind of threads that combine everybody on this call. It's just a lot of synergy in the way we think, and the experiences we've had kind of growing into this new phase of where DevX, I think, can, just drive the future of where the world's headed in tokenization.
Awesome intro. I feel like I'm in good company here. All right, so let's kick it off. So I want to kick it over to you, Ray. If we could at least start with you, maybe we could round robin this. But we've gone all hands on deck with DevvExchange, with making sure this is getting out the door. And I'm curious as to what it is about this specific opportunity, that was monumental enough to just take it and go, this is the one. We're putting our focus here, as opposed to spreading it out, if that makes sense in the way that I asked it.
Yeah. So actually, it's a couple of things. So one is, as we mentioned, that the world is, tokenizing, but it isn't that we're necessarily just saying, okay, the world's tokenizing, let's just put an exchange in the middle of it to create a marketplace. A big part of it is that innovation that Tom and the team have designed and created really allows us to change the paradigm of a financial marketplace and at a global scale. So we have value propositions that are unique to the marketplace in terms of, if we think of the different kind of subsets of tokenization, starting with crypto, going into securities or stocks, and then into real world assets. Our value proposition at the front end of that is the fact that we're non-custodial, that we allow people to control their own assets and don't have to put their assets into somebody else's wallets. All the other exchanges are effectively brokerages. The reason FTX happened was because your assets were in their wallets, and then they just took them out. And the reason the Bybit hack happened was your assets were in their wallets and they got hacked. So our technology keeps that from being a possibility. At the same time, recourse and solutions for fraud, theft, and loss. So all of these capabilities really change the paradigm in that single segment. Then you take that, all those benefits, and then you look at the securities piece. Well, not only do they have all of those pieces, but now there's T0 settlement. Most exchanges are T2 trying to get to T1. That means 2 days to settle. So think about the volume on all the exchanges that's done in a trading day. Multiply that by 2, and then the marginal risk associated with that, the settlement risk. And one of the most powerful things we do is, not just manage and mitigate risk, which in a financial domain is huge. We actually eliminate risk. And so that's tremendous. And then when you talk about real world assets, when we get to the point where, the world is digitized, we have those value propositions, but initially technology and innovation that, again, that Tom has created, that allows for liquidity, that enables a real marketplace for all these things. So all of that is incredibly exciting, and it changes the dynamic of the whole world financial ecosystem. But it also allows us to lay the foundation that all of this DevX infrastructure allows us to build on and deliver on applications across the different landscapes. So it isn't that we're kind of just pushing other things aside, we're using this as kind of the bulkhead or the beachhead for allowing us to provide all those other innovations and it piggybacking on something that is incredibly impactful, global in scale, and relevant at the moment as well.
Well stated, Ray. And so, Will, from your and I'll repeat the question for you. What was it about the DevvExchange opportunity that really felt so monumental? And I know that you have a really unique perspective coming into this with Expansive and everything else. And so I'm interested to hear your background and what you think on that.
Again, Expansive is very unique, but I want to really emphasize, I've been hanging out with Ray and Tom now for quite a few years. So they've had an influence equally on me as well, very impactful. Got to know them when we were just getting Expansive off the ground. That's really important because Expansive was all about basically digitizing the intangible assets of the world, intangible commodities. When you think about commodities like gold and, coal or water, right? They're all physical, right? How do you actually digitize the intangible and make a product and a marketplace out of that, right? It's extremely intriguing, right? Which is what we did at Expansive. So I'm always driven by marketplaces and people's ability to create those exchanges where you're driving efficiencies. And that's what Ray and Tom really started to hook me into early on, right? And I have that background. I thoroughly enjoy it. I think if you can drive liquidity, you can drive really robust marketplaces. And I know that because I helped to build a multi-billion-dollar marketplace that's a leader in the world. So I bring that to the table, but I do so in the way that some of the things that Ray touched on they're not just simple statements. And I think it's a credit to Tom early on as a technologist. And I've been very fortunate in my background. One of my best friends, the late Paul Allen, was the co-founder of Microsoft. Paul taught me early, as a technologist that he was, to really listen to the customer, to really listen to the marketplace, right? And I think Tom took that approach early on and really applied it, because the way that he approached the crypto market as it started to transition, where we saw the marketplace today, the traditional finance institutions, right, whether it's Goldman Sachs or Blackstone or Fidelity, right, they're trying to drive efficiency. And they're trying to take the core of what the DeFi market that Tom helped create, and they're trying to use those attributes. And to what Ray was saying, what I think is really valuable for DevvExchange is that we're not trying to turn their marketplace upside down or take anything away from them. We're just trying to make them more efficient. And that's really, really important. We want them to continue to do their business in a traditional way, but we want to do it efficiently and drive those attributes so they can lower their costs, accelerate their marketplace. That's really the core. And I think anybody's able to drive an exchange where you're not flipping it upside down, right? You're going to really drive liquidity a lot faster.
I'm curious, Will, based on what you said, obviously with, all right. So to use, Tom, he likes to mention Larry Fink and his statements about tokenization, and with good reason. The guy's kind of been the financial oracle for the last few decades, and with things moving in that direction, we can definitely see that. I'm inundated with crypto market news, right? So everyone's talking about tokenization. But Will, I'm interested in your take on not just market size, but like how fertile is the market right now for people moving into this? Meaning, there's got to be a lot of companies out there that maybe have heard of tokenization, but don't really understand how it can impact their business or like how it would even be of benefit to them. Are we still that early in the process?
It's early, but we're seeing that fundamental shift in the marketplace because, as you say, some companies are starting to grab onto it. The companies that are starting to grab onto it are twofold. One, you're starting to see the real financial plumbing companies like the DTCC and Swift and others. They're moving rapidly to tokenization. If you look at it, they've all announced tokenized platforms for clearing, for digitizing transfers. So we're seeing the plumbing companies at the base starting to really move, right? On top of that, you just mentioned Larry Fink. BlackRock, one of the first to announce, their tokenization strategy. Blackstone, Citi, JP Morgan. You can't name one that's not in it. In fact, it's getting to a point where if you haven't announced that you're in it, you're going to lose, right? So that's where that inflection point is. Those who are not tokenizing are not in the game, and they're not going to be in the game. So that's the inflection point right now.
Amazing. And just to cap us off here, Tom, I wondered if, we touched on briefly the very unique things that make DevvExchange, to use Ray's words, a shift in a paradigm shift, right? Essentially in the market with the fraud, theft, and loss protection, contingent transaction sets, the sharding architecture, et cetera. I wondered if you might touch on, kind of, I guess really what I'm asking is, there was a lot that went into that over the last 8 or so years, and you really saw that coming before anyone else, to my knowledge, anyhow. It wasn't even a thought on anyone's radar back when you were getting patents on a lot of this stuff. And so I wonder, how do you feel that this will be, best implemented in the market? Like, what's this going to look like?
Yeah. There's a couple points that I'll make, just kind of rounding out what Ray and Will had said. So to your point, one of the things that I think we did is we designed for enterprise and institutional use. And going back 8 years back, it was really kind of innovative thinking, right? And so, got started, kind of the time where Ethereum was starting to grow, got started, as ICOs were becoming popular. This is before, DeFi really became as common a term and known, the way it is now. And so a lot of times when you start something that you really feel is visionary and you're kind of pushing something in the future, you're too early. So in some ways we were a little too early. Like in those early days, people were like, why are you doing enterprise blockchain? Why are you doing, traditional finance philosophies? Just go do an ICO, just go do DeFi, right? But we stayed focused and kind of had our path set. And, eventually the world caught up to us, and we were a little early, but we weren't too early, stayed alive, and then the world caught up, and timing is just perfect now. We've spent the last 8 years building what the world needs. And then that kind of leads into my second point. Broadly, the way I would kind of position what we're doing is we're allowing traditional finance or TradFi to get involved with DeFi. So DeFi has a lot of innovation, has a lot of just really compelling concepts, new ways of doing things. Things are fast, quick, easy. It has this problems, right? You have all the fraud and theft and risk, and it's the Wild West, and it's not regulatory compliant, but there's a lot of innovation built into all of that kind of Wild West nature that's been bubbling the last few years. And now we're connecting those, bridging between traditional finance and decentralized finance. And most crypto companies don't think the way that you need to think to have traditional finance get in. I mean, we have this call right now, like two world-class, venture capitalists, two world-class business leaders that think the way traditional finance, thinks, but have the ability to understand, DeFi and understand the need for that bridge. So that's really fundamentally to me what we're doing. We're checking all the boxes that you could bring the innovation of DeFi and combine it with the trust and security of TradFi.
Wonderful. And thank you for saying that, Tom. And I do want to be sensitive of the time for Ray. I know you've got about 2 minutes left. And so I want to throw a zinger at you before you go. What would it actually take? Obviously the world's financial markets have gone through a number of paradigm shifts from ticker tape to digital to, online. And what would it actually take to bring, the world's markets on chain? Like, is that actually in the works? Is that something that is front and center on their mind?
Well, so that's an interesting question for, on a number of different levels. So I'll start the answer with that kind of just adding to what Tom had just said. If you think of it about bringing, you can think of it about bringing TradFi to DeFi, allowing TradFi to benefit and take part in all the innovation that DeFi has created. Another way to look at it is we're bringing not only TradFi to DeFi, we're bringing DeFi to TradFi. So we're allowing the DeFi space to have all the security and capability assurances that enable the confidence and ability to take part in all those without, an obscene amount of risk associated with it. And so I think that paradigm it's not going to change. It's because of that value proposition, things are going to continue to grow in that direction. But one of the things we do that really allows the transition that really gets to the heart of your question is we allow that to happen in where the Web3 infrastructure is abstracted out. So at the end of the day, the transition isn't going to be felt too directly. It's going to be kind of a Web 2 interface, a Web 2 world with a Web 3 back end, where you're getting all these capabilities, all these things that you're going to be taking for granted in the very near future. And a whole paradigm shift is going to have happened underneath your feet, and you're not really going to notice that it really happened, right? So think of, right now we're spinning on a globe that's 25,000 miles an hour, that's hurtling around a sun at 70,000 miles an hour, and all that dynamic actions going on, and you're not really feeling it. And that's what it's going to be like. And we're helping to create that. And really not just helping to create it, but enable it with the innovation that Tom's created and the leadership and guidance that, Will's providing and the whole team that we've created. So that's why we're so excited about all of it, because the world might not really see it happening, and even our community might not be feeling it, but we know, being in the center of it, and we're excited as we create these things and make those changes and bring it to the world. So very exciting.
Excellent answer. And if you have to drop, Ray, please feel free. Thank you for joining us today.
I leave everyone in great hands. Thank you very much, Austin, Tom, and Will. Thanks.
Will, on your last answer, you had mentioned the DTCC, who we've brought up a bunch of times, one of the largest clearinghouses in the world, and you had mentioned that they were moving towards tokenization, probably if I were to take a guess, probably as a measure to keep themselves relevant, more so than anything else. And I'm wondering if a lot of people that are going to be watching this are going to be crypto native, but potentially not TradFi native, right? And they may not really understand what happens under the hood, like when you buy a traditional security, let's say on a brokerage. And I wondered if from your perspective, you could expand a little bit more upon why is T0 settlement a big deal, and why is everything that we've kind of got in the secret sauce a big deal?
I think that's a question that Tom should answer, because it's really the underlying part of that question is technology. And I think, there's no better technologist in the room right here, right now than Tom. So I think his answering that will then play into why the market's grasping for it.
Yeah. So in general, I've seen a few companies starting up that I think this is a good way to kind of describe it. So I've seen a number of companies that starting up that we've been talking to, see if there's synergies that are looking at, bringing, tokenized assets into traditional finance. And some of the companies that I've seen doing that are, taking kind of the traditional way of doing things and implementing it where you do things with tokens, but using a TradFi mentality. And part of the reason I'm bringing this up is just even over the past 2 weeks, I've seen several companies kind of doing that. We've been talking to, again, is there synergies we can work together? And so one of the examples was a company that was doing just financial transactions between large entities, and they would get onto the platform, and it was like a 90-day onboarding onto the platform because they had to work through all of the contractual agreements to get onto the platform. And I was listening to them, and I'm like, that's just like, you're kind of missing the point, right? You can't just tokenize things and then do it the old way with this kind of patched on, just stuck on token model that everything is the same. That's not going to work. contrast that again, like, we've been building our exchange. We've been looking at lending platforms. I'll just use lending as an example. Like, you go on to Aave, for example, and 20 billion in assets under management, and grew very big very quickly in the scheme of things, much bigger than traditional finance companies ever built. And you get on that platform and it's like, all right, just transfer some ETH, lend against it. Now you have USDC, bam, it's done. There's not 90 days of figuring out the contracts. So what DeFi really kind of brings to the world is all of this kind of speed and ease and just digitization of things where there's a lot of inefficiencies. Okay, so part of the reason I describe those types of concepts is you look at how the traditional world evolved and how it grew. And we've invented contingent transaction sets. Any two contingent transaction sets, any two parties can transact assets instantly, mathematically instantly, with no middlemen and no settlement risk. But if you don't have something like that, you need middlemen. And if you need middlemen, then you need risk mitigation, and you need time, and then you need to pay those middlemen. And so when you look at big exchanges, big traditional exchanges, all of the world's existing, stock exchanges or commodity exchanges, or whatever, there's entire massive industries built around, all of the settlement processes and how all of that works and happens. There's a lot of delay and a lot of cost and a lot of expense and risk mitigation, all those things, right? Okay, so to answer your question with all of that background, why is CTS important, contingent transaction sets, and why is our instant settlement the way we implement things? It's just such a better way and more efficient way to do things. You remove all the middlemen, you remove FTEs, full-time employees that drive all these things. You just do things in the way that you would have done it originally if you had the technology. And you drive efficiency, kind of to Will's point, that's a big part of what we're doing is driving efficiency, and it just dramatically changes everything. And all of these big companies, they look at where their expenses are, where their costs are, where their risks are. And if you can start to remove those costs and those risks, and you can not only mitigate risk, as Ray said, but even remove risk, their businesses become dramatically more efficient. And then you can then become the rails and infrastructure that the world finance runs on. And that's kind of the big vision of what we're building.
So Austin, you spoke about them, on layering on top of what Tom just said about DTCC as an example of staying relevant, right? Yeah, we're at that inflection point. It's just like the internet marketplace. You're either going to innovate or you're going to die, right? So on one side, you have the OCC, right? You have Swift, you have DTC, you have Broadridge, you have all the plumbing companies of the financial institutions today, right? They have to stay relevant. They're not going to change their formula. We're just going to make their formula more efficient, right? Because on the other side of the equation, their customers, Citi, JP Morgan and others, are tokenizing their platforms, whether it's gold, whether it's securities, treasuries, you name it. So in the middle, we're going to try to drive the efficiency between those marketplaces because they're transitioning, and they're transitioning right now. You can pick up the Wall Street Journal today, and I can make $1 million bet. Somebody on the front cover announced some level of tokenization today or somewhere in the world. And that's the other thing. It's a global play, right? So I kind of call it, I told Tom this and others, but it's kind of that Kodak, Blockbuster, Amazon moment, right? Some of them just didn't get it and didn't make it, right? And so we're right at that cusp right now.
Wonderful. And so we've touched on a few of, the really unique features, contingent transaction sets. The obvious regulatory adherence, the ability to integrate with legacy systems. I mean, all sorts of things that do, to use, Ray's phrasing, just make it kind of a better way of doing things, right? You won't experience a lot of the drawback. But I'm interested, and this is, I'm sure, more a question for you, Tom, but the liquidity caches, the way that liquidity is handled on the exchange, I'm interested how that plays a role, because that is kind of a new feature, not a new feature, but something new that the community may not be totally familiar with.
one thing that's kind of nice with the liquidity caches, while Will is here as well, is a little bit of how it originally evolved, and some of the impetus that we thought, wow, this is a really good opportunity. So I'll just do kind of a quick description of it, but I'd like to jump into kind of what I've spoken to Will about, how to implement the liquidity caches. And then another thing that we should jump into as well, again, while we have Will, is again, Will kind of opened my eyes to the magnitude of tokenization. And so I'd like to spend a few minutes just kind of discussing like where the world's moving, and why it's such a big concept, and why we know, this tokenization movement is as big as it is. To me, it's kind of like the movement to servers in the cloud in the mid 2000s. All these big companies were saying, like, we're never going to put our data on somebody else's computers. And you had 10 years of servers kind of growing and everybody pushing back, and then it just flipped a switch like almost overnight. Everybody's like, oh, we got to get our data on other people's servers, And so tokenization is kind of like that. It's the world has said, like, oh, it'd be great to tokenize assets, great to tokenize stocks and bonds and music and anything you could think of, right? And in today's day and age, like, why haven't we, right? So let's jump into that in a minute too. Okay, so on the contingent transaction sets, one of the most important things in any kind of financial framework is liquidity. And so we started building the exchange, and we said, how can we drive liquidity on the platform, right? And so one of the ideas we came up with is creating these pools of liquidity and having them be applied in different ways. And one of the initial ways of thinking was having them be applied for payments, and kind of having instant transactions. And you want to buy a cup of coffee at Starbucks with Bitcoin. Well, you got to transfer from Bitcoin to USDC, or some dollar equivalent to stable coin, if you want to do that. And so you could use these liquidity pools, to implement that. But then we started saying, well, if we're creating these liquidity pools, then we could use them with the exchange as well. And that became really probably the main focus in the design and the patents that we put on, is how we're going to use it with the exchange. And so then you start thinking, well, if you have these pools of liquidity, then you can. And some of the original thinking came from how decentralized exchanges work, that kind of thing, and how they have that K value that's constant, and you maintain balance, kind of through that mathematical function. And we said, well, is there other ways we could implement it? And so using these liquidity pools, and now we call them liquidity caches, to implement market making really became a compelling concept. And then we had our discussions with Devv Ecosystem, and Devv Ecosystem said, if Aave, was compliant the ways we need, we would get into it right now. We want to get into DeFi innovation. We said, all right, well, we could take these same pools and implement lending, right? So it expanded, and again, we're writing out the patents and all this as our thinking is expanding on all of this. And it kind of came down to, these aren't really pools the way they're liquidity pools with decentralized exchanges. There's something else. They can be used for payments, they can be used for market making, they can be used for lending, and all of those tie in, right? You contribute DevvE into a liquidity cache, and then maybe you borrow off it at the same time. So you tie those two pieces together, or you have an Aave-like system that has lending that's perpetual loans that the TradFi world doesn't even really fully get yet, but it's going to be what they use in the future. I'll guarantee it, right? And so you have these automated liquidations that Aave has, and you start getting your arms around that and go, oh, that's a really cool concept. It's a good example of the innovation in DeFi that you can bring to TradFi. But if you have a liquidation, then you need to convert. So you could tie that in with the exchange, or you could tie it in with kind of the payment system and automatically liquidate, right? So all these pieces started really kind of coming together. So this is the part then that was really an exciting. This is one of the most exciting conversations I've had with Will, actually, is we started talking about it, and you say, if you can have all of this liquidity, well, if groups like Devv or other banks or other asset managers or other banking institutions can put their assets into those, they can earn a yield off of it, and they can earn a yield off of it at a reasonable rate with very low risk. And Will pointed out to me that there's a lot of investors interested in that don't want to invest into a high tech, massive return. They just want to take their assets, have them be safe, and make some yield on it. So Will and I started talking that. So maybe I'll hand over to Will and kind of get his thoughts on what he thinks these liquidity caches could turn into more broadly.
Yeah, picking up on that, I mean, Tom and I brainstormed this quite a bit over the last few months, and I think going back to the whole point, one of the things that's driving tokenization and driving this concept of pooling is the world right now is in a capital constrained environment, and on top of that, we've had digitization occur very quickly, and we're seeing the commoditization of capital movement very quickly, right? But there's really liquidity lacking in the marketplace, and that lack of liquidity is driving tokenization right now. People are looking for returns, and they're looking how can I get better returns or even marginal returns if I tokenize those assets, right? And that drives the whole pooling concept, right from the start, like the ability to get liquidity, even at a minimum, right, and a consistent level of liquidity. Right now, people are starving for that. Markets are starving for that. So it's perfect timing for us. And I think the pooling concept, Tom and I, we've talked about from an investor standpoint, because you can use pooling in many different ways. We could set up special purpose vehicles, SPVs, to raise the capital for those pooling concepts, because different applications, payments, use it for the exchange, that kind of thing. So we're creating a number of different ideas right now, and we're actually sharing it with the marketplace and getting very favorable results from it.
Yeah, there's a lot of excitement that we're seeing right now.
I was curious, being that we're all US based, I was chatting with a very large layer one last night who had made a decision to, really open up to the United States. And they publicly declared that. And I reached out and I said, did you guys get some sort of a license or something that happened? They said, no, we just made a commercial decision based on the new regulatory environment that this was a good decision for us, that this is the way that we're going to go. And this is a multi-billion-dollar, layer one, very large. And so I'm curious, with all of us being here in the United States, what are y'all's take on the current, not regime necessarily, but there's been a big shift. Before it was like, if you want to work in crypto, get out of the United States. And now it's like, if you want to work in crypto, go to the United States. And how will that impact, maybe the go-to-market strategy or the way that DevvExchange is rolled out?
Yeah, so I'll take that one, because I would venture to say that there's nobody else ever anywhere that's kind of dealt with this issue more than me, right? So a U.S. company starting in 2017-ish, and then you ride through kind of to the point where FTX goes under, and there's this hornet nest of activity, and they paid a bunch of politicians. There's no better way to get everybody upset than pay a bunch of politicians and then find out that money was fraudulent, and so even before FTX, a little bit before that, like, I was talking with our lawyers, and there's so much where you would say, can we do this? And they're like, I don't know, it's kind of gray area. Other people are doing it. And then a couple of years later, you find out all the people that were doing, various things, like assuming that tokens weren't going to be securities because they had a certain level of utility, then you find out that they do, and they're getting sued and get put out of business, right? So we were more cautious than most anybody, and it's served us well. Like, again, we took this kind of traditional finance approach, and so that's kind of ingrained in us. So we're a crypto company in a lot of ways, but we've taken TradFi mentalities, and that's what's going to allow us to kind of bridge TradFi and have the feelings of safety and security, because we've been cautious, the whole time. And so you live through this where you ask your lawyers, can you do this? Can you do that? And they're like, I'm not sure. And so you just be careful the whole time. And then FTX happens, and again, you have the hornet's nest, and the SEC just starts going after everybody, and you just kind of try to keep your head down and stay under the radar. And so we had many years of just being handcuffed, where there's things that even the lawyers would say probably are fine. Like, a couple years before FTX, my lawyer said secondary trading of tokens on markets aren't going to be securities. Like, they didn't even say, maybe. They just said that's, we did analysis and that's pretty clear. And then, Ripple gets sued by the SEC on that, and they won. But, we didn't have the hundreds of millions, literally, of dollars that Ripple had, kind of along the way, and so we just had to be careful. Now, the new administration comes in, and the tone shifts, and it really does just open up. So I kind of feel like there's three big headwinds that are driving kind of where we're going. And this is, again, all kind of big picture stuff. One is we've had handcuffs on for years as a US company in the crypto space, where you're just trying to keep your head down and not get sued, not because you've done anything wrong, but just because it was a very litigious SEC for a while, just suing everything and seeing what sticks, right? That opens up, and now you get this big, massive tailwind now instead of headwind, that a US company doing crypto. I think we're in a perfect spot, and we were cautious along the way. There actually was a point where, working with DevStream, some people know about DevStream, where the SEC took a look at us, and they looked into us deeply and didn't do anything at the time, where they were still being very aggressive. So again, our caution was very well warranted, and if we hadn't been, it wouldn't have worked out nice, because eventually we came on the radar. But now it's moving ahead, where U.S. companies, I think, are going to be a prime place, and we're a U.S. company, and we've been in the place creating innovation for TradFi for many years. Then you've got the overall crypto markets, which we've been through kind of the usual 4-year kind of bear cycle, and now it's kind of hitting bull again, and it feels different in some ways than it has in the past, but still it's in a place where things are exciting. So I feel like we've got this big tailwind as well. And then the biggest one is tokenization, right? And so tokenization is, again, like online servers and cloud computing was in mid 2000s. It's this massive movement. I don't think people in the crypto space realize how big the crypto space is going to change, how much difference there's going to be over the next year or two, because you have 30, 40, 50 times as much money coming into the space, and it's going to drive everything. So actually, that's one of the things I really wanted to hit, on the call today with Will, is just getting his view and kind of his perception, because he opened my eyes to it. So he's got a perspective that I think is very unique of where tokenization is going and why it's such a big deal.
Yeah, to add to Tom's points, I'm very optimistic, more so now than ever, not only just in the change of the administration in Washington, but different than other regulatory environments, particularly in finance, where a lot of the regulatory matters we deal with today were driven by traditional banks, right? Now, it's very important to recognize, when you see some of the early tokenization path being set, like we talked earlier about BlackRock, Blackstone, Apollo, those are not traditional banks, all right? Those are shadow banks, right? Even Fidelity is not a bank. They're shadow banks. And you have a new administration that really wants to drive a framework, but they're not going to be over-influenced by traditional banking. So what we're seeing is a real push of tokenization by shadow banks, who are not always driven by the frameworks of regulatory, right? They're driven by the capitalism of the marketplace. So I think what we're going to see start to formulate here, and I think it's really unique and something to keep a close eye on, is I don't think the pendulum's going to shift where we're going to be overregulated. I think we're going to find a real medium of regulation that plays both in the traditional banking world, the TradFi, as well as in the shadow banking world. And I think that's really important. And I think Trump, and the SEC right now, they really want to make, the U.S. a digital asset hub. They really do. I think they're concerned about the U.S. dollar. I think they're concerned about digitization of the dollar and where that's all headed. So I think we're in a good spot for that right now.
Wonderful. And so, Will, to pivot just slightly, so you had mentioned earlier on when you were giving your introduction, you were talking about, expansive, that you were in charge of raising over there. And I'm curious where you see, your role specifically in moving DevvExchange forward, and what you would be really focusing on the most. I hope you understand what I'm asking.
Yeah, absolutely. So typically, because of my background and experience, one of the roles that I really like to play early on, like I did at Expansive, and I'm doing for Tom and Ray, I like to come in at the executive chairman or chairman level and be very involved in the capital and corporate plans of the company. And the reason for that is I find 99% of the time, entrepreneurs like Tom waste so many cycles raising capital. It's just an arduous process that just is a waste of time for them. So I like to come in, kind of help create the capital plan, and then go implement that and put Tom and I in front of the right folks, but the people who are going to matter on the cap table, right? So it's an example at Expansive, I came in early as an investor, and then as executive chairman, they asked me to do exactly that. They asked me to build the capital strategy, capital plan, and go implement it. So over a course of 5 years, I raised a little over $750 million from the likes of Blackstone, Goldman Sachs, B of A, Macquarie, all the world leaders. But I did it in a methodology where they were all adding value besides capital, right? So if you look at Expansive's trading platform today and their market base, every one of those capital providers is in the business, right? And they're trading and they're supporting the system. So I want to do the same here with Tom and Ray, right? Is to go after real added value capital. That's always been my measure. And so as we step into the exchange and step into some of the other aspects of the business, you're going to see us evolve with real leaders in the capital markets, as well as in the token markets, as well as in the crypto markets, right? We're going to look at that strategic value, and we're going to bring those people in with us.
Incredible. And so I think, we're getting close to the top of the hour here. And if at this point, the folks watching are not excited, well, you guys should all be excited. We're just going to put it that way.
Yeah. Let me mention one thing about that, right? So when you look at what Will's done in his career, from again his first funds in the 80s up until the point where he really dove in and really tried to drive Expansive. I think the crypto space hasn't really kind of fully acknowledged or fully really realized or understood the importance of getting someone like him, on the team and the types of things that he brings to the table. So I think a lot of my wheelhouse is the really early stage stuff, creating technology, creating innovation, setting these kind of the vision, the majority of what I do really is kind of selling vision. Like everything I do is just comes down to that. But we're reaching a point now where I think we could really start growing in a much bigger way, and that's not my wheelhouse. I can't go and talk with C-suite at BlackRock and Blackstone and Goldman Sachs and all these big groups, right? And so Ray more so than me, right? So this applies both to Ray and Will, but we're kind of reaching a point where we're moving out of my wheelhouse, and I see some real positive potential growth ahead. I'll say potential just because I always try to keep things grounded too, right? But we've got good momentum now, and so headed into kind of where we're going with much bigger entities and much bigger companies, and you start to get to the point where we want to bring those in. It's invaluable to have guys like Will and guys like Ray that can make those introductions, that have done that before and put those kind of deals together and grown companies to this kind of next phase. So it's very significant, and I don't think people have kind of fully realized the significance yet. So
yeah. Thank you, Tom. The one thing I would add, I always like to give real examples when people ask me why are you involved with DevvExchange and what Tom and Ray are doing? And there's always been inflection points technologically for me. And I'll give a quick story real fast, a 2-minute story. Back in 1994, I was in Tokyo with Paul Allen, and we were floating around the Akihabara area, which is all the electronic stores. And it was probably October, and we noticed every store window had these things called digital cameras, right? They were just popping up. And back then in those days, typically in the 70s, 80s, and 90s, Japan technologically was always 3 to 5 years ahead of the US market, right? Come back to the States and, I start asking around, nobody's talking about digital cameras at all, right? So I start saying to Paul, this is a real trend. I mean, the Japanese see it. Every store had a digital camera. It's moving in Japan. So I started putting word out in the Silicon Valley. I was looking for any engineers who were mucking around in digital technology. And I was introduced to a young engineer from Cirrus Logic who stepped out, and he was really building code for the first memory products for digital cameras. And he agreed with me. It's going to take off. So I flew to Rochester and met with Kodak, some of the senior guys at Kodak. And I left there, and they basically told me they didn't believe digital photography was ever going to really happen, at least not at the film level. And 2 weeks later, I gave the young kid $10 million. He started a company called Lexar Media, and he sold it for $1 billion a few years later to Micron. Now, I tell that story because those are the kind of inflection points that we're seeing right now in the marketplace. These are the things that are starting to occur in tokenization. And fortunately, partnering with Tom, who built the rails early on, you don't meet many people who have been 8, 10, 12 years in crypto, right? Not many people were building rails back then. Right. So fundamentally, we're very sound in the technology core that we have as this transition is starting to happen.
Unbelievable story. All right. So to round us out, I have 2 more questions. I think they would probably be in your direction, Tom, but Will, feel free to jump in here. So last year, and we made the announcement that we did, and I have to ask these because the community will tar and feather me if I don't. So last year, we made the announcement that we did sign a big deal with a large, well-known TradFi institution, and there were some checkpoints that we needed to kind of hit before they were willing to do a joint announcement with us. And I want to kick it over to you. Where are we at with that? Are we going to be able to expect that prior to exchange launch? I think I've fulfilled my question duty with that question. Yeah.
Yeah. So not too much is different from what we've kind of put out, right? So we've put out what we can. So nobody wants to describe the partner in more detail and what we're doing in more detail than me. So I know people are itching to get detail, but it is what it is in the short term. But it was a very important deal for us. I'll give just a little bit of a story about it, though. Again, we can't give names yet. So to answer your question, things are progressing well. We meet with them consistently. We're going through and doing integrations of their technology and ours, and we'll be at a point soon where we can announce more what it is. And when the exchange goes live, it's going to be integrated, right? So it's going to be something we would announce at the latest then. But I do think we're going to hit milestones before that we'll be able to announce it more fully. And I don't think those milestones are too far off. So I know that's not a definitive answer and kind of more of the same, but it is what it is. But it's still very, very positive. But one thing that I thought was just kind of a nice story is Will described kind of in the growth with Expansive that there was a deal that was an important deal for them that really drove their credibility and let them and from that point on kind of other deals that they did really made it where they could put agreements in place that otherwise would have been harder. And so that was with an expensive case with CME. And so as we were kind of, Will described that to me back in October, and he knew the company that we were talking to and said, if you guys can close with them, I think that's going to be your event that was the same, as what CME was for Expensive. It just gives you credibility and lets you, kind of further grow and have credibility with other partners. And we found that, right? So we're talking with other companies now. They sign a non-disclosure. We say, this is who we're talking with. This is what we're planning. They go, wow. And then it's helped us, to close other deals. So Will told me that in October, then we closed in December. And as he described, it's been kind of what he said, is it's really kind of helped us kind of grow more momentum. So.
Yeah, that was pivotal for Expansive. And, it's a publicly announced event that happened years ago, but we partnered with the CME, and that was critical because anybody wants to make a futures market off your marketplace is a real statement globally, and CME was a world leader. So, and fortunately, there was a lot of executives at Expansive. We had those relationships, but the endorsement, never mind the business model, but just the endorsement was incredible for the company.
Absolutely. And so I'm curious, what can we expect over the next, and I know that we were originally, and we still are, saying H2 of 2025, but what can we expect as the rollout starts to happen towards DevvExchange?
Yeah, so you'll see more partnership announcements and more kind of plans being announced. So an exchange is a complex system, right? And so it's not just a bit of software that you put out on its own. You gotta integrate with a lot of different pieces. So we've had a lot of discussions, and this is stuff that Ray would be able to chime in better than me. Coming into this call, I was hoping to say less than more, because people hear from me more often, and I wanted to have people hear from Will and Ray more. But since Ray isn't on, I'll try to do it a bit of justice. But a lot of this has been his efforts, right? And so we've been talking to a number of hardware companies, hardware wallet companies, right? And so the idea is you'll be able to trade directly from your hardware wallet. Plug your hardware wallet into your USB port, enter your code on it, and then say, I want to do a trade, and the assets never leave your address that's associated with that hardware wallet that maintains the private key. We need bailment partners, right? And so we've spoken to several bailment partners and have gone through, analyzed their APIs, analyzed the safety and security of their systems. One of the bailment partners has Lloyd's of London that kind of certifies that if there's ever a hack, it's insured, which gives our customers really a lot of security. And our customers, in a lot of cases, again, are TradFi, right? So we don't want people coming in and saying, oh, we got to trust this, right now, a small company, hopefully one of the world's biggest in the future, but right now, a small company. And so we put things in place where you don't have to trust us. You just have to trust Lloyd's of London. Everybody trusts Lloyd's of London, right? There's no issue there. We've been having conversations with other bailment partners. We spoke with Devv Ecosystem, for example, about managing tokens underlying a euro stable coin, right? And then we've been having a lot of discussions with market makers, and we've been having discussions around how we would use our liquidity caches for creating liquidity in the system in coordination with market makers. And then you've got just other business relationships, other bailment partners for stable coins. Then there's the whole side of things around the regulatory side of things, and we've got some pretty compelling announcements around people that are getting involved that have a lot of experience there. We have other announcements around people that we're looking to get involved as advisors or kind of core team leaders that have experience in these areas. And so I know it's a bit of a range of when we're talking about, but part of what I'm trying to portray is there's a lot of moving pieces, and all these pieces need to come together. So it's not the kind of thing that you just say like, all right, we're doing it this date, right? It's a lot of pieces coming together, which creates some uncertainty on the exact timing. But that said, all these pieces are coming together, and we have momentum in our partnerships. That momentum is creating momentum with other partnerships I think we're going to announce. The regulatory side, the bailment side, all the hardware side, all of that is coming together. So I think what people will find is it's been a lot of like, oh, geez, you're not putting out as much information, but you can kind of get from what I'm saying, all these pieces when they do come together, then it's going to be bam, 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 and a lot comes out, and that's all going to be lead up to the launch of the exchange. So.
Well stated, sir. Well stated. All right. So any closing thoughts you guys want to share before we wrap this up?
One of my closing thoughts is I often say this on investor calls. One of the things I'm most proud of that we've done is the team, and I can say with sincerity, I feel honored to be working with somebody like Will. I feel honored to be working with someone like Ray. So that'll be my closing thought. Kind of Will's inaugural kind of presentation to the community. That I'm honored to work with the team that we have across the board.
Yeah, that feeling and honor is mutual. I've been fortunate in life to work with a lot of technologists, and I have to say, Tom is right up there with all of them that I've ever had to work with, and it's not just his strength in technology, his personality, and his perseverance. I mean, Tom gets very focused. He sees through it, which is. My bet always is a bet on people. I don't bet on technology. I always say, if you give me a C+ technology with an A+ management team, I make money every time. If I reverse that, I lose every time. So, the fortunate part about working with Tom and the team is got an A+ team, which is, makes my job and my interaction a lot easier. So it's been a pleasure.
Wow. Gentlemen, it was absolutely a pleasure chatting with you both today. Thank you so much for being here. And for anyone watching, my name's Austin, and I'll catch you guys on the next video. Take care, everyone. Bye-bye.
Thanks, Austin. Thanks, everybody.